Hello everyone, welcome to the market outlook for week. Gaurang Shah from Geojit Financial Services. And after a correction and a recovery and consolidation last week, when we get back to trades this Monday morning, there has been it opened up on the positive side marginally, but then as I speak to you, there is some amount of profit booking that is witnessed on the market, both on the Sensex Nifty and Nifty Bank. Just to familiarize you with certain levels. Sensex is at about 61,630, down about 165 points. Nifty is trading with losses of 15 points, 15, at 18,335. Downtake on Nifty Bank, approximate levels are around about 42,000, down about 140 odd points. And there has been some strength recovery in the rupee last week that we saw, and the strength was quite significant if you actually go to see compared to the other emerging market currencies. But there is some amount of weakness this morning on the rupee against the dollar. 81.05 is the level of rupee against the dollar, down about 30 paise against the dollar. And on the energy basket, Brent and NYMEX, a little bit of uptick marginally, of course. $96.25 dollars per barrel is Brent, and $89.18 per barrel is where NYMEX is trading. So this consolidation, as we spoke last week, midweek rather, on Wednesday last, will continue for some more time. But as we mentioned in our last week conversation, that given the backdrop of events that we have in the present scenario, any large correction looks a little bit distance away. A little bit of profit booking that we witnessed like last week could be witnessed, and we also mentioned that it is good to see this consolidation because it gives a base building exercise for the markets to make a stronger base, and then possibly on fallback of various positive triggers that are lined up, especially on the domestic front, there could be a little bit of more higher level. But mind you, the upside is also going to be marginal, like the downside is going to be marginal. Don't expect any miracle upside or runaway rally on the markets, and it's only prudent to expect that post the uptick that we've seen. And given the history, market always consolidates after a decent run up. So let's give it to the market. Let's have some more patience. Let's build some base and then move higher, which will be a durable one, because on a weak base, if you move higher, then durability is at question mark. So this consolidation will continue for some more time this week. This is what our anticipation on the markets are. And like we mentioned to all those short to medium term traders, try to maximize your profit by putting your stop losses in place. Don't do anything adventurous given the scenario. And long-term investors, like we mentioned, always use dips to get into some quality stocks and names from a long-term point of view. On the second quarter earnings, where virtually today, that is Monday, 14th November, is going to be virtually the fag end of the Q2 earnings. There is going to be curtain downs, and the summation, like we mentioned last week, for the second quarter closure of this financial year has been not extremely positive, but not disappointing also. So it's been more or less in line, barring one or two sectors and stocks within those sectors. But expect better color and shade for the third and the fourth quarter going forward from here on. Like we mentioned, state elections can play a little bit of overhang on the markets unless and until we have the outcome of those state elections, and depending upon those outcome of state elections, the results, I think the market will take it in its stride. Too early to predict anything. So that is one trigger on the domestic front that you should possibly keep your eyes on. Like always, we give investment ideas. Last week, I recollect, we had given two investment ideas from the IT universe, and those were Persistent Systems and Tech Mahindra. And we did see a significant recovery in NASDAQ, if you recollect, and that reflected on the IT sector last week as well, and even this week, this Monday morning rather. One sectorial indices is with trading with a little bit of positivity or strength is the IT index. And slowly, steadily, I think a lot of people on the streets are coming to terms that given the correction, price correction, time correction, and the valuation and the outlook going forward, I think it is possibly time to look at IT. And we at Geojit remain positive on the IT, and hence we had given out two investment ideas from the IT universe last week. And today we have two more investment ideas on the fundamental side from a long-term point of view. First one is from a smaller, mid or small private sector bank called City Union Bank. There has been tremendous turnaround on the earnings front, and we expect this momentum to continue going forward from here on. And the levels where it is trading, I think for long-term investors, a staggered buying should be a decent approach for this particular stock. But remember, this is a fundamental investment idea, so keep a longish time horizon in mind. The second one is from a lesser spoken about sector, capital goods. And even the stock which we are going to recommend is also not spoken much about, and that is LG Equipments. So this LG Equipments is a mid-cap capital goods sector stock. There has been some amount of consolidation or counter, but we believe that since this is a sector which has not been spoken about and a stock that has not been spoken about on the recovery of earnings, this could be another investment idea on the fundamental side from a long-term point of view, which you could possibly look at and stagger your investment in both or any of the sectors that stocks we recommend from a long-term point of view. So on both these counters, start investing small amounts, and whenever you get a meaningful correction or a dip, you can go on adding to both these stocks. But please bear in mind, these are fundamentally long-term investment ideas, not short to medium-term trading calls. Thank you very much for your patience hearing, and I'll see you again next week. Till then, take care. Bye-bye.